Just want to tell you about Greece now, though, because that country has been slapped with the world's worst credit rating. Of course, that's one of our top stories this morning. Standard & Poor's cut the nation to CCC, saying the risks for implementing the EU-IMF borrowing programme are rising. So, Greece is increasingly likely to face a debt restructuring and the Eurozone's first ever sovereign default. So S&P's downgrade comes as policymakers bicker over the terms of Greece's second bailout. But one economist says the cut is largely irrelevant to markets. He says investors are paying attention to the ratings agencies at all. They're not paying attention. They're just waiting for Greece to default. So Royal Bank of Scotland's chief European economist, Jacques Cailloux, joins us now. He's here in London. Good to see you, Mr. Cailloux. Thanks very much for speaking to us. So you're saying that the ratings agencies are pretty much behind the curve on this one. The markets have already priced this scenario in a debt restructuring and possibly a subsequent default.
Yeah, absolutely. I think, the market has moved on from these ratings actions. And again, I think the market is focusing on the policy response, which is looming. And it's quite questionable why the rating agencies took that action just maybe days before a policy announcement. So it's very, very hard to see a market reacting to this sort of announcements. It's not helpful for market sentiment, but the markets have moved on. I think the situation is very, very difficult for the periphery overall. And it's all eyes on the policy response and what sort of private sector involvement is going to come out of that deal. That's where the focus should be and is, and I don't think any rating agencies can actually make a decision at this stage without having the information which is going to come over the coming weeks. So very relevant to me and for the market, I must say. OK, so Jacques, then what are you expecting from that policy announcement in the coming days? You've got Eurozone finance ministers, I guess, meeting, attempting to break the impasse over more aid for Greece ahead of next week's summit. Will they make any progress? Well, we've got very, very important decisions to be made. Today is important. Friday is important. We've got Sarkozy and Merkel speaking together. We've got Monday policy announcements, and next Friday EU heads of state meeting. So these are extremely important dates. We think that Germany is going to cave in and get together with the ECB on this, and we think that the deal is going to be a Vienna initiative. We don't think we're going to get the Schäuble's debt swap proposal going through. So we're taking a different view here than I would say the market in the short term. Medium term doesn't solve much. It buys time. I think this means that the situation remains extremely tricky thereafter. But short term, I think there is a sign that we could get a bit of a relief as far as Greece is concerned with a deal which would not have any sort of credit event attached to it. OK, so you raise a number of interesting points there. Just want to touch on one thing you said, that Germany will essentially go with the ECB on this. What then can we expect to see in terms of private sector involvement in sharing the cost of a second bailout for Greece? Well, I think in terms of, the Schäuble proposal, which leaked out a few weeks ago, showed that he wanted a debt swap of 7-year maturity on the existing bonds. This would have implications, even if it was on a voluntary basis, this would have implications in terms of rating agencies here become important because the ECB said they don't want a selective default or a default from rating agencies. Schäuble has also said that he doesn't want to go against the ECB. So the outcome is pretty clear. There is not going to be any debt exchange. The only option left on the table, which would have no implications in terms of default decision from rating agencies or CDS trigger, is the Vienna initiative. So that's the only option left on the table. You need a voluntary commitment upfront from investors to roll over their debt comes 2012. The existing bonds will mature, and then you agree that you'll keep your exposure to Greece in 2012. There are many forms whereby you can get an agreement with this. It needs some potential credit enhancement. Cailloux, does this mean that we won't see a default anytime soon, or perhaps even in the next year? The time horizon is key here. It depends what you define by anytime soon. I think the market's built up expectations of an imminent restructuring or default, and that's certainly what I would argue against. The situation is very fluid, so we can't read much ahead of the next few weeks, given how the policy situation is evolving. So just saying that in the next couple of weeks, we're going to get an announcement which will go against a default, an imminent default. OK, so announcement will go against default. Just a quick one on Spain. They've just had a bill sale. We saw a slight spike in yields.
Is this something that is brewing in the background? You know, could we start to see increasing concerns with regards to Spain, contagion risks, etc.?
So where I might be a little bit more positive than the market on the short term in terms of the Greek situation, I remain extremely concerned about the medium term. This is true for the periphery, it's true for the contagion risks. So I don't see any reasons why this idea that contagion is gone is valid. I think we have all the arguments to think that contagion remains very, very alive, and there are risks of contagion coming back to the fore. Spain hasn't got the defense mechanisms that you would like to see to protect itself from renewed loss of confidence. So I think it's very important at this stage that the Spanish economy continues to deliver on the growth front and on the fiscal front, and we see risks on both sides. So I think this is a situation which remains pretty precarious, I would say.
Jacques Cailloux, thank you very much indeed. Very good to get your analysis. Thanks very much. Appreciate your time.